How's it going, everyone? It is Wednesday, July 3rd, 2024. Let's get into the picks of the previous video. I gave an AMD call credit spread, which got filled yesterday. So I got in on this spread. If I draw my lines, right around here for about $1.01 credit. So again, this is the 170, 170, 175 call credit spread expiring July of next week. And probably could have gotten even a little bit more credit over here. And if you didn't get the spread in today, there may be a chance for it to set up, or sorry, you didn't get a chance to enter the spread in yesterday. I like the relative weakness on this stock today. You can see how it is respecting this high minus algo line. I think this is an algo line, but I don't really use algo lines that much. I just tend to draw trend lines and look for volume. But this high minus trend line. And respecting that, we also have some horizontal support right here at the $166 level. This is coming in earlier than the 200-day SMA, as well as even some further horizontal resistance somewhere over here. So there's lots of levels to lean on for the stock, and we have a bearish trend. I'm going to get more into this in a second. Just going to quickly go over the portfolio updates as well as some of the market picks. And then we'll get back into this because this has some more meat on the bones in terms of the discussion. So in terms of some portfolio updates, took profits on AEO yesterday. I took profits at 1936. So stock was pretty dead here. You're seeing we're getting a bit of a bounce and then a slap down. So I like the relative weakness for these last 2 days, but I've been in this stock for a little while. It's kind of struggling to advance past this point. I know the market's been a little bit strong, but in my opinion, I wanted to get out of that trade. So just got out for those profits. I didn't really want to have to manage it anymore. Could have maybe took a slightly better exit, maybe gotten another 6 or 7 cents on the guy, but that's a bit more of a refinement. Still happy I took the double on that trade, and the main win was actually just holding through the bounce, trusting this downward sloping trend line, trusting the AVWAP E, and then writing it down for that next leg lower. So we're going to remove AEO from our list. That was a win. Unity was the next one, and I closed the remaining 1/4 part of the trade somewhere around here, 1598. See the stock is coming a little bit lower today. So again, I think I played this pretty well. This is just kind of some further profit optimization. But overall, pretty happy with Unity. So we just have AMD as a call credit spread, which I'm pretty happy right now. Market's making a new all-time high today. D1 chart is still intact. Still mildly bullish. But still more neutral on the shorter term. This is, I guess, slightly bullish that we're making a new all-time high, but I did bake that into my market plan. So for AMD, even if the market does make a new all-time high, I expect the new all-time high to fizzle out and retrace. I don't expect it to really have much follow-through after that move. I really feel that the hour is late on a move like this. And, at this point, this is a lot of slow moving garbage. Really buoyed by a few, this is really a CPI that buoyed it up a little bit higher. And then that was it. So if we zoom into more of a medium term trend right here, here's what we see in the market. Let's go to maybe the H1 chart to show a little bit of a wider chance of this story here. So here's what I like on the H1. You can see that we got the gap up, compressed a little bit, broke out of the compression to the upside, came back down. We were retesting the top of this compression, right? So that's where this level is here. Came back up, tested this level again, couldn't break through, held the support level, and then we actually had a launching pad to go higher. This move has been pretty decent in terms of price action, pretty steady price action, but really not the best volume. And To me, it just feels a little bit suspicious. The fact that we're making a new all-time high before the holiday on a half day, there's not a ton of volume. So it's one of those things that's like it's so unexpected at this point that it feels expected. It's just one of those little curveballs they throw at you. So a good time to be patient. I wouldn't overload on longs because this is a little more suspicious, a little more light volume. But you also can't really short it right now because there hasn't been any sort of technical excuse me. There hasn't been any sort of technical confirmation to be able to really take a lot of strong shorts. So if you're taking shorts, right, like I know, for example, I was looking at Starbucks yesterday. Starbucks is really nice. This is a nice steady grinder. You got to expect to maybe take some heat on this guy, but I really like this grind lower on Starbucks. It may even be my pick of the day, to be honest. I really, really like this stock. I liked it yesterday. I like how we're kind of testing this low again here. See if we can do something through this. So I like it. Looks pretty good, but I don't want to take shorts, relative weak shorts, exactly when the market's making you all-time high. I want to wait for unemployment to come out. So we know that our short-term market buy is still pretty neutral. Not as bearish right now, but still pretty neutral. Longer term, sorry, that's the longer term market bias is still one bullish. I'd say mildly bullish is the right word. Shorter term market bias, pretty fairly neutral, just looking for any signs of weakness and follow through on that weakness. That's the best opportunity for day trades and swing trades. And then in the for the day, we're probably mildly bullish here, but it's a very weird mildly bullish. We got this ISM services that was in contraction territory, hit a 4-year low. We had this kind of huge high vol doji, didn't really go anywhere. Then it was just kind of grinding up higher and hitting this new all-time high. And the volume is so low, the price action is so weak that, oh man, I am yawning a bunch today. Price action is so weak, volume is so low that it really doesn't feel like we're going to break it. It really feels like we could reject off this at any time. So it's been just kind of an odd move to trade. So back to AMD. Let's talk about some considerations for this stock. So obviously, a couple things here. We want a stock that is relatively weak. We want a stock that has 2 levels of resistance. So actually, I think I have 3 here. There's first level, second level, third level, potentially even about a 4th level here. So that's sort of the basic criteria, and we're getting $1 per. We got $1 of credit per $5 of strike price. So those are the basic requirements that you got to meet before you put credit spread for the stock. My market outlook is, even though it's mildly bullish in the long term, it's neutral, fairly neutral, and looking for signs of weakness in the middle term. So that's really where this trade lives. It lives in the middle term. So that's the basic stuff out of the way. Now let's talk about some other things that I considered. The first part is what can the trade really break in or out of this range? So I like trades in this wide bearish channel because there is a trend, and it's really hard to trade this with equities or with a more directional trade like just straight puts or short shares, because you got to get in at these tops, right? If you short over here, right, you're short thinking that there's a breakdown or somewhere over here, you're pretty much in the red the entire time because it's just way too choppy, not a lot of strong conviction anywhere, but the conviction is mildly bearish, so we can take advantage of that with a call credit spread. The second part is that, do we have a runway to break out, right, or break down? If you remember when we took WDC a couple weeks ago, right? So I took it somewhere around here, I want to say maybe June 5th, right? Or bounced off here, somewhere around here. I got to recheck my trade. But you can see that it had a runway all the way up over here. And it was, rubbing against this all-time high a little bit. But, I think it was actually it might have been May 21st. When was this? May 31st. Sorry. Yeah, May 31st is when I took this trade when we got that long candle. And you could see how the stock grinded higher. I got the market right, I got the stock right, and it was relative strength. It had a runway to really escape, and I actually took profits on that trade because the delta kind of worked in my favor. Right, the stock moved so far away that the spread became so out of the money that I just pretty much bought it back for pennies at that point. So I look for that runway because it gives me that extra option of exit. But I don't quite have that on AMD over here. The reason I don't have that is because we have this pretty long-term low minus trend line coming up from here. And you can see that the stock has been respecting this trend line. So, there's a couple of maybe certain trend lines coming into play here, but that one is fairly significant. This is a balanced trend line too, so there's an equidistant point here. And that provides a bit of a floor in terms of how far this stock can drop. So that goes a little bit against me. The second consideration that I had to make was the fact that there were other semis that had earnings, right? And I called it out in the video yesterday. If we go to, let's just go here. You won't see all the stuff, but just look at ASML, right? So ASML's earnings on 7/16. And you can see on April 17th here at earnings, right? April 17th, we had a pretty high volume bearish candle here. If you go to AMD on the 17th, you see a nice red candle, right? So it did get dragged down a little bit by the same stock in the sector. So now it could work in my favor, but it could also work against me, right? And this is the kind of move that it can break TA. There's so much volume and there's some new information released. It could break some TA. So you got to be aware of peer earnings, especially with earnings seasons coming up. And that's the other sort of, negative tailwind over here. So those are the two things that have, I'd say, caught my eye in terms of the extra things I look at for AMD. But overall, I like the credit spread. And again, I'm leaning on this market, all-time high over here. Now we poke through, and I'm expecting no follow through. Now, if we do get follow through on a breakout over here, I will have AMD on a more tight leash. As long as the stock is performing, I'm not worried. But if it starts to gain some strength, I'm going to get out of the trade because I already don't have the market working in my favor. Now, if the market is weak, but AMD is strong, that's a more problematic position for me because I'm trading the stock as a surrogate for the market. So if this stock goes against me, I'll have to consider my exit plan. And that's where this third and final piece comes in. So I have this 170, 175 area, right? So if we get through 175, it's actually this above this high from May 28th. So if I get above this high from May 28th, I have a decent runway all the way until 180. So I can close down my short puts at that point, my short calls at that, my short calls at that point, ride the long calls up. And I'll probably be able to take a smaller loss, scratch out, or even maybe a win on that trade. So you don't want to have to leg out until you absolutely need to. What I need to see again is a strong move from the market, a breakout with follow through on heavy volume. And I need to see the stock do the exact same, right? That's when okay, my market condition has changed, my stock bias has changed. Right now, my market bias is like a 0, my stock bias is a -2. These both have to become like a 2 or even a 3, right? If I'm going from a mildly bearish position to straight calls. So those are the kind of the things that I am just looking out for. And some extra considerations you can consider for call credit spreads. But if I had to recap everything, it's you have your basic criteria, which is the same thing as a put credit spread, but just flip it for a call credit spread. My criteria: 1, I like these wide bearish channels, and I like entering at the top of these channels. 2, I like to have a clear runway on the way down, which sometimes we get, sometimes we don't get. 3, I like to have a clear runway as an escape plan. So if the trade goes sour, I can get out of the spread. That also ties into the liquidity. If I have a higher if the options in the stock are more liquid, then I can more easily get out of the trade versus a stock that maybe has a -2 liquidity, or even something like AFRM, where I didn't panic. But I mean, this had pretty good liquidity, but when it makes this huge moves up like that on some news, I mean, the bid-ask spreads just get so wide, even on a very highly liquid stock like this. So that's what makes it legging out pretty hard. Yeah, but those are some extra considerations that you should take. And obviously, you want high IV. That's how you find these nice premiums a little bit easier. So thanks for watching, everyone. We will take a look at AMD in the coming videos, but no pick for today. I think it's better to not have anything swinging. If you can help it, I would keep it light. We are getting unemployment on Friday. There could be some fireworks or some news there, some movement. So no need to get anything crazy. In my normal account, I'm simply in premium selling strategies at this junction. All right, I will see you all on Friday.